Yeah, so are you spring? I mean, you said that it was cooler than what you wanted, but
Yeah,
have you at least turned the corner at this
we
point?
did. I mean, we've gone from in the last 2 weeks here, we've gone from a 70-degree day to snow to rain
Yeah.
back to a high of 40. It's like, okay, that's the running joke though. If you don't like the weather in Michigan, just wait a minute.
And
It'll
it must be
change.
those states that begin with M. We're the same in the same boat with you.
Yeah.
It's like we had snow this morning for about an hour, but it
Oh,
melted. But it's like it's just so discouraging to see it. When April 1st rolls around, I pull out my flip-flops and I just wear them regardless.
I refuse to give in.
I am not giving up on us having an earlier spring. Exactly. Exactly. Hey,
That's
everyone.
awesome.
Thanks for joining us today. We'll give it another 30 seconds or so before we get going, but we'll get started here really quick. Yeah. So I'm kind of I don't know how I ended up here is a mystery to everyone in my family. Like, how did she ever end up there? She does not belong in the cold, but it is what it is. You sure enjoy it once it does it makes me appreciate it.
Yeah,
Uh,
exactly. I've spent holidays outside the state where, yeah, it's supposed to be snowing and stuff. I'm like, it's 80 degrees and palm
yeah.
trees. It's nice, but I don't know if I could live here full time.
Yeah, exactly. Exactly. Well, let's get going here this morning. Thanks everybody for joining us. As always, we want you to communicate with us while we're talking here today. So do pop things in the chat. Hopefully, you're having a little bit warmer weather than Mark and I are having today. Today, I have with me Marc Reneau, who is the first VP Mortgage Operations Manager at First State Bank. Marc, thanks so much for doing this with me today.
Oh, you're welcome. Anytime.
Yeah. Share with us a little bit. A lot of people on here probably know who you are already. You've been pretty visible within our network of people, but do a brief intro and share with us kind of who First State Bank is and kind of how you separate yourself from others in the industry.
Yeah, actually, we are a 107-year-old community bank in Metro Detroit. Um, Been around for what seems like forever. Uh, this is my 34th year in the business, and our big standout is we have a bridge loan product that we've created that literally no one can touch. Um,
Oh,
and everyone I explain to it, they're like, oh, okay. Because what people can't seem to wrap their arms around, it's people that are offering bridge loans. There are some investors out there that are offering them. Um, they're using it as a money maker. I'm like, no, no, the bridge loan is you use that to get to the money maker, which is your end loan. And they haven't quite figured that out yet. So they kind of price themselves out of the market with it. But that's our big one.
yeah. So it's a catalyst. It's a
Yep.
catalyst to get that. It's your loss leader, not loss leader necessarily,
Yeah,
but it's your,
we don't lose money, but we do make a little bit on it, but not very much. But it's to get
yeah.
us the end loan. But last year, in what can be considered one of the worst years in the mortgage industry, we actually set a record for dollar volume and closings in our department. So
For you. Good for
yes,
you. Yeah, definitely not everyone can kind of has that they're able to say that this year, that's for sure. So we were together, although I didn't see much of you until the end
yes, till the
while
end.
we were in Louisville. Nobody eat pizza in Louisville, I think is what I heard from a couple of different people. So didn't see you until the end. So we didn't really have a great chance to get caught up or anything, but share with me like your favorite thing, your favorite session, your favorite topic, your favorite thing that you had as a takeaway from Louisville. And while you're doing that, anybody who's on the phone that was in Louisville, share with us yours too.
Yeah, for sure. No, I will, and I've said this before, and I'll never stop saying it. If I do nothing else at the conference, it's participating in the collab lab. Plain and simple. That is hands down the most beneficial item that you can do. So all the lenders out there, if you've thought about participating and you aren't sure, just do it. The people in the network they're fantastic. The fact that what everyone's willing to share and talk to you about, it does a number of things. One, it confirms we're not alone in this space.
That's
Everyone
right.
has the same problems. Yes, loan officers like to lie and misrepresent stuff. Operationally, costs are through the roof. Uh, but we all share in that pain together. And from time to time, you will take away ideas that, oh, I can make that work in my shop. And it's just
Yeah.
fantastic. You
Yeah.
can't ask for a better group of people to talk to about this stuff.
Yeah. You are getting like 100% confirmation in the chat from Aaron D and Amy Azarandia. So yeah, so I think I do think that we hear quite often from lender members, especially if they haven't done it and then they do it for the first time, they're like, why didn't I do that
Yep.
before? Because you now
Hands
have
down.
kind of created your own little think tank of people that not only do you get to meet with them when you're in person and see them, but they're also resources for you when you have anything else going on within
Well,
your organization outside that you can tap into, right?
well, you beat me to that one. That was, as to say, we have AAA on here, Amy, who she is the compliance guru. So a little shout out to Amy there. And there are times I've reached out to her. I said, I need your opinion on this. And she's more than willing to help. She responds, able to work out. I know we talked to Erin on one of the groups that I'm a member of as well. She's real knowledgeable, and it's just like the people
Yeah,
here was great. Such a
we do
resource.
have we do have good people. That is for sure. I keep saying that. It's all about the people.
Yep.
We do have really great people within our network who are willing to help each other and do have that sense of being stronger in working together to get things accomplished. So appreciate that.
And for those that are in the community bank space, Ashley's awesome as our representative. So thank you, Ashley. I would be remiss if I didn't say that.
Ashley, he's trying to get something out of you out of this, so he had to give you a
Here's your shout out.
there's her shout out. Not that you would ever do that,
Nope,
but
never.
Ashley
Never.
does do a great job for us as do the entire rest of our team. So this last week at conference, it happened as well. Lots of conversation regarding NAR settlement,
Yes.
the lawsuits and everything. I think, some of us have decided it's maybe a little bit too early to figure out what really is going to happen.
That's the advice. Seriously, it's just wait, folks.
Yeah.
It hasn't even until it's signed off on by the Department of Justice. Just wait.
Yeah.
The only thing we can guarantee, it's going to change the market. Period.
Right.
That's all it's going to do.
Right.
Yeah, we dealt with it with LO Comp, and now it's their turn to, the real estate agents to go through it with theirs. And honestly, it's going to thin the herd. It's going to get rid of those part-time agents that, thought I'd keep my license because I can do a deal here and there with my family.
Yeah.
Now you actually have to have a value proposition, and you have to justify why you're making what you're making. It's not that you're not worth it, because I've seen what some of these real estate agents go through, but you have to justify it.
Yeah, I think that was the one thought that I kind of came away from. It's like mortgage is not, mortgages had these types of issues, maybe not one with the real estate agents before, but mortgages had these types of issues before. I mean, LO Comp used to be negotiated differently than it is now, and now it's just I heard somebody say it's just now it's their turn. Now they get to feel the pain that we have had before.
Yes.
The one thing that I think could happen, and that people I think came out of, at least we talked about it a little bit in our lab group and stuff, is that people probably should be at least thinking about and, having some sort of plan around it, or at least be thinking about it, not necessarily have a plan, is how it could change your process for your production staff, and what does that look like, and what kinds of plans do you put in place?
So yeah, we've been thinking about it, and I keep going round and round. We talked to a lot of our local agents here because, the old adage, real estate, it's all location, location, location. It's different everywhere. But at the same time, in talking to the local folks here, it's the same thing. The true professionals are going to stand out. They're not worried at all. They're like, this is a status quo for us. We're going to keep doing. The one thing I think it may shift is being able to go after listing agents from a loan officer perspective, because they may have some more influence on referrals now. They won't be able to rely, I'm just a lister, I have no influence, because that won't necessarily true. But the other thing that may potentially come out of this, and I'm sure someone's going to try, but I could see, jumping on the AI bandwagon, but I could actually see someone putting some sort of, startup in place where it's, you list with this service electronically, it's going to cost you 1% or 1.5%, and we'll show you your next house another 1% and we'll arrange the showings for it or something like that. A low cost, not very involved, if the experienced home buyer might be able to take advantage of.
Mhm.
I could see that popping up. Don't see anyone
Yeah.
doing it yet, but I'm sure someone's working on it.
Yeah, I'm sure something like that. And especially with, if you think about at least the generation coming behind me, it's like they're so accustomed to
Yes.
doing those. I mean, it's like second nature because their phone has been their third hand for their entire life, at this point, that would make sense to me too, that somebody would come in and try to take advantage of. It's a time of change anyway. So it's like if it's going to be a time of change and things are going to change, take advantage of that opportunity now to make that maybe a little bit bigger shift in how people view things.
Yeah, no, I couldn't agree more. Though the irony in all of it is that taking this out of the lawsuit, one of the big claims was that, oh, the consumer never knew it was negotiable. I'm like, I could list off 20 different companies that are low rate brokerages that, were one flat fee. Here you go. I mean, they were all there.
Yeah.
So that's why, I mean, it's going to change up the disclosure part of the transaction, I think. But at the end of the day, it's not going to have a huge impact. I don't think it will.
Yeah.
They'll work through it. They'll add a few more pieces of paper and we'll keep doing business as we do.
Yeah, that's kind of, I think, what was the consensus of almost everybody there. For anybody who wants some great news, though, on it, MBA does have a pre-recorded webinar. I have to admit, I did not listen to the whole entire thing. I listened to the beginning of it. The one I liked most, though, that has made the most sense to me out there. So I'm going to give a shout out to Marc Milam from Highlands Mortgage. I know he is not on here, but he, in his LinkedIn post, you will see that he kind of did a synopsis of some of the things that he thought would happen. And it was just like what he thought the impact to the transaction was going to be. And I thought it was just a great way of explaining things to somebody. So shout out to Marc Milam.
Yeah, that was a great message. I shared it with my team. I'm like, this is worth sharing. I shared it with some realtors. I'm like, look, they're not in our market, but it's still applicable. I think he nailed it, and again, professionals are going to rise up. This is just going to be another, and one more step we have to take to
Yep.
get to the end loan. Not
Another blip in the mortgage cycle that has happened that we'll talk about years from now. And
yes.
um,
Remember when?
yeah, remember when you used to be able to?
Yeah.
It'll be one of those, I think. Affordability, of course, is still in the news. And if nothing else, I feel like it's almost become, people have become much more aware. We've been aware for a long time. Everybody
Yes.
in our world lives it every day, all day, in and out, and sees the impacts. But I feel like it's getting broader nationwide press. It's showing up in, mainstream TV. I think that the message sometimes is missed a little bit or tainted a little bit in a way that I wouldn't. But it is showing up more out there. So came out in the news this past week. Buyers need to earn $114,000 a year in order to afford a typical U.S. home. 35% more than the typical household makes.
Yep.
And that was published by Redfin is where I found that. So the home cost $412,778. I know in the Twin Cities here, it's super expensive for being in the Midwest. So that number didn't surprise me. You're in Michigan, where I've heard at times and in certain places, it's maybe a little bit better. Does that seem like a lot for a
It's
median house for you, or is that pretty much in the range of
that's
where you guys would be too?
Well, Ed seems way a lot, but I will tell you, so just locally here in Macomb County, Michigan, for anyone that's familiar with it, we have a couple, what we always refer to as the first time home buyer cities. Where you could buy
Okay.
a house up until a couple years ago, you could buy a house for 80, 90, $110,000.
What?
Wasn't that long ago.
Wow.
Now fast forward to today, and we literally like a month ago, we closed a loan in one of these cities where the loan amount was just over $200,000. And I'm like, I had to do a double take. Like, there? Are you kidding me?
Yeah.
That's just, that's the drawback to being in what we will call a capitalist society. It's supply and demand. That's the reality. There's just
Yeah.
too many people wanting homes, not enough supply, and the cost to build them hasn't gotten any cheaper. So
Yeah.
Yeah,
The average American family needs to come up with an extra $29,448 just to be able to have a possibility of owning a middle of the road
yeah.
type of home, which
And
is
then
just crazy.
it's crazy. And then fingers crossed, you don't need a major repair like a new roof or a new HVAC system or
Well, or any type of updating as far as that goes, because as we all know, whether you go to the grocery store, the hardware store, or wherever you go right now, everything literally costs more.
yeah, no, for certain. I think probably the next big deal on the horizon is gonna end up being, um, I think we're gonna have to come up with some sort of viable rehab product, outside of your 203K, outside of your home style or home renovation loan. I know personally, we're working on one here at my institution. I'm trying to come up with one for us. It'll be modeled after those, but I mean, honestly, those are the homes that are going on the market, quite honestly, at this point. And yeah, they're gonna need updating, but they can barely afford to get in with the down payment, so figuring out a way to try to make that work as well.
I was so excited. I saw an actual for sale home sign in my neighborhood, which is the first one I've been here a year. It's the first one I've seen in a year, other
Wow.
than brand new construction signs. And I saw it and I was like, oh my gosh, there's a house in our neighborhood that is for sale. And it was taken down the next day. It had already sold.
Oh, yeah,
It was like, whoa, wait, why did they put up the sign? I
yeah.
mean, it was just very bizarre, but
They
yeah,
they wanted to put their name out there, the realtor wanted it out there,
they
but
did. And
it goes to the market though. Like I said, I have a good friend of mine that I'm relocating from South Carolina to Michigan. His house has been for sale. It's a 5-year-old house. So it was just built 5 years ago. He's down in South Carolina. It's been for sale since the week of Christmas. Still hasn't sold yet.
oh,
But he
wow.
is surrounded by so much new construction that they have a ton of choices. I go, give me that house up here. I could put it anywhere within 100 square miles of my building and it'll be gone in a day. I
Yeah.
promise you. So
Yeah. I know that
crazy.
we're down to the end of my new construction development. We've got one building going up still, and one building that they just finished. Because I'm on the multifamily end of our development. And in those two buildings that have 10 units in them, only three have not been sold already. And so, they're already taken at this point. But yeah, I think I bought my first house in 80. Gosh, it was a long time ago, 1980. And that was a very normal first time home buyer type situation. And in 1980, I paid $110,000 for a very simple single family
Yep.
house here. That house would sell for about 390
Yep.
right now. So it's just a little crazy out there for sure. Um, Obviously, if you're looking nationwide on what average wages do in order to get you into a home, it's a lot more. I think it was up 3 percentage points the portion of wages needed 3% more from just a year ago of what you would need to qualify for
Well,
this house.
yeah, I think too, the other thing you might start seeing, and I don't know if this is something we were discussing earlier, I'm trying to remember, but I was reading an article this morning about it. And I truly think what you may start seeing is employers actually are potentially offering some sort of housing incentive now. Um, for helping pay rent to keep, because from what I've seen, you have employees that don't want to come back to the office, and I get it. I understand wanting to work remote. I personally can't do it. I don't have the self-discipline. I can make it work maybe for a day or so here and there. But there's also a benefit to being in the office. So having that, so getting people closer to work, I think, so instead of potentially having, a much larger base pay, you might have, medium base pay, but you know what, there's this housing incentive where it'll help pay for your rent or down payment or something like that. I think that might go a long way in employee retention as well.
Yeah, I saw that as well. And it was like employers are offering, I equated it to, so when I started in this business, my very first job in mortgage was in relocation. So it was in a relocation division. And back in the day, don't even know if they still do it now. when people were on that fast track of moving every 3 years or so for their large employer, they would offer them a subsidy.
Yep.
So it was, it was a subsidized loan. It may be a 5, 4, 3, 2, 1, so that after, if they're there for 5 years, they subsidize their housing for that period of time. It appears that that's a very similar thing that some of the employers are doing now,
Yeah.
to get people back into the workplace. It's like because people have moved outward,
Yes,
less
because they could.
expensive to live, and they could, right? Yeah, it's
Yeah.
probably more about because they could.
Yep.
Some of it I think is about the expense associated with living, in a city. So they're trying to offer them, it's become an employee benefit.
Yes.
And it seems like it's just like that subsidy that they would have offered of somebody who is relocating, that if you will be in the office every day, this is what we're going to give you.
Yeah.
The article that I read, it was $6,200
Yeah, on average, yeah, for
on
the benefits.
average.
And I think it's not a bad way to go, quite honestly, because like I said, there are definitely benefits to being in the office, though I will tell you, I have some employees that work remote that I'm quite happy they're not in the office. My day's a little bit more peaceful. They do a good job, but so it works both ways.
It definitely does work both ways. The article that I had read said that not only that, it not only was to get them back into the office, but it was, people were happier.
Yes,
You take away some of the financial burden of things. They come back into the office, they have their peer group around them, but they're also not feeling the same amount of stress. And maybe it's some compensation for the amount of time that you spend.
in the
Um,
car, stuck in
if you're
traffic.
commuting in, if you're stuck in traffic,
Yeah,
that type of thing, you don't get as frustrated if you feel like, that they have some skin in the game with you as well. So I think that that is definitely part of it. There are some cities that are doing some interesting things related to housing that I always like looking into those. It seems like there's never any like easy big answer. And I think if
oh,
there was one, it was somebody else was probably has profited from that, would have profited from that already if there was one. But um, there are places that are looking, I don't know if you have any of this going on where you're at, but they're going back and looking at their legislation, some of which is very, very old, and
yeah,
restrictions put on housing of things that they can't do. So New Jersey has a New Jersey affordable housing law. And under the new law, the Department of Community Affairs, instead of it going through a court process, will now make the calculations to determine, in 6 state regions, the affordable housing needs. And so they feel like it will open up, by the Department of Community Affairs being involved in that. It will open up more opportunities for affordable housing versus it being handled in a court run type situation.
yeah. I could see where that'll help identify some opportunities. I can tell you personally, I sit on the planning commission for my township where I live. And
Okay.
what you run into more often than not is, if you've not heard the term before, it's always the NIMBYs, not in my
Yes.
backyard. So a lot of people are all for it, but they're like, oh, but I don't want it near my house.
Yeah.
I don't want it near my place, where I live. Uh,
Yeah.
so you run into those challenges, but, and again, you also hear, land, they're not making any more of it, buy it while you can, it only appreciates type thing, but there's not a lot of it.
Yeah.
So it's a precious commodity for a lot of folks. And
Yeah.
so it's a tough balance, and then being able to build it, like I said, affordably is going to be key.
Yeah, and the length of time, of course, that it takes to get through some of that when you're dealing with other municipality things too. It's definitely, like I said, it's baby steps forward, and not a big fix, and also not a quick one.
Yeah, no, it's not. I wish everyone would take Rich up on his, his proposal.
Verbinski plan.
This Robinski plan. I loved it. I've mentioned it to a couple people when I was in Washington. I'm like, I'm telling you, get these, for those that haven't heard it, lower the capital gains tax for the investors that own all these properties and encourage them to sell them. You know what?
Yeah.
I've talked to a couple of them, they're like, that's the thing that holds them back, is when you're looking at paying, 38%, whatever it is on that capital gains, they're like, yeah, I don't want to take that hit.
Yeah, I don't want to take that hit. And right now it's making me money,
Yep.
in addition to taking a hit. But yeah, that was, gosh, that had to have been what, 3 years
That
ago,
was 3 years
probably?
ago. I wish they still haven't acted it yet, but I'm telling you, it's the best idea I've heard yet.
Shout out to Rich.
Yes.
Your plan is still being talked about. I'll have to shoot
Yes.
a text after we get off of here and let him know that we still talked about it on the
Yep,
last
I'm
week
still
of
pitching
Memorial
it.
Day.
Still pitching it.
Miami-Dade has done something that's a little bit different too. So there are different places that are looking at different things. They need $1.5 billion to fund 101 projects that affect 13,691 affordable housing units that are already in the pipeline. But the lack of funding means that they're currently not moving forward.
They're at a standstill. Great idea. Now you need the money for it.
I know.
Yeah.
As a county Miami-Dade, which this was amazing to me, and maybe it shouldn't be, but I feel like Florida had like a huge amount of people that moved into it.
Yep.
They're short 90,181 affordable units for renter households earning below 80% of AMI.
Yeah.
90,000 units. That is
Just,
an
just a little
amazingly
short.
high number.
Yeah.
Yeah. And apparently their area median income is about $75,000 annually. And so, yeah, that's a lot, but now they're at a standstill. So they've implemented this program. They've obviously had some traction getting projects up and running, and now they're $1.5 billion short in funding for
Shy
it.
of funding it. Yeah, it's one of those things that you want to see it succeed. You really do, because it does address a much needed, an issue that's evolved. That it affects all our communities, no matter where you live, no matter what state you're in. This is a problem. So we'd love to see some success stories, because then maybe we can start replicating it elsewhere. But it's not going to be quick. We know this.
No. Yeah, it's little itty if just all of those things that people have thought about, if they could all like come into fruition, like all at kind of the same time, we may be a bigger percentage of the way there. But it seems like it's like you tackle one and then it causes this other little ripple effect.
Yep.
It's
Or
that
there's an unintended consequence because of some old laws that are on the book or something else you can't get around. And yeah, it just takes a while to work through the system.
figure it all out. But it does appear like people are trying to figure it all out. That is for sure. One of the things that we talked about before we hopped on here, which doesn't have a complete impact, but it was something that I just hadn't read before. And, trigger leads we've talked about
Yes.
every week, I think for weeks and weeks and weeks on end sometimes. But the FCC has a new, well, it went in effect in December of 23. That they claim they have closed the lead generator loophole, requiring marketers to obtain consumer consent to receive robocalls or robo texts, one seller at a time.
Yes.
When I initially read this, before I read further, I thought, oh, why are we so worried about trigger leads? But then you enlightened me. So enlighten
Yes.
everyone else.
So yeah, I wasn't 100% up to speed on this, but I was reading through it, and it's a good start. It definitely, for those that, I'm sure some of you on occasion will get a random text or a phone call from a robot saying, hey, you can save on insurance, or hey, this is the IRS, you owe us money, or hey, any number of things you can do. What this does is require them to actually get consent from the consumer before they can actually enroll them like in a program like that, which, don't get me wrong, it's a great start. The great irony in all of it is that it doesn't technically take effect until 1 year from the day they publish it in the federal registry, which they've not done yet, which means we get to suffer for the rest of the year through this election season with the robocalls and the text messages. And then after that point, they'll start getting our consent before they can send that stuff to us. But it's a good start. There's some overlap between that and the do not call registry. Again, I'm sure we'll get some more clarity on that when it happens, but we still going to need to work as an industry on the trigger lead thing. We just do, which for those that aren't aware, there's that website, the optoutprescreen.com. not affiliated with any of us, but when customers go there and fill out the information, it takes them off that list from being able to have that lead sold to somebody. So, and it
Yeah.
does work. It's effectively been working. You just need a couple days before you pull that credit report.
Right. You need to be
Yes,
pre-planned, which some people are better at than others.
correct.
Last topic of conversation today, we talked about this at conference. It was brought up. We had Marc McCardle from the CFPB with
Yes.
us during conference, and it seems like it is another one of those things that we talk about quite often. And I think that Friday on the rundown, AB Anzarandia probably put it best. The agencies know what as an industry we want, but we are just not going to have it in the administration that we have current. They know what we want related, and this is related to LO comp.
Yes.
They know what everybody wants to hear, but they also know that they're not going to give it to anyone, at least within this administration. I think we heard pretty clearly at conference that they monitor larger brokers that are maybe doing some things that don't follow the LO comp rules, but they obviously cannot monitor, do not have staffing to monitor everybody related to that. But they do not, if they saw a switch in how things were done, it would be monitoring brokers more tightly and not lessening how bankers, lenders are monitored. Would you say that that's a fair statement?
No, I think it's a fair statement, and actually, Marc was actually pretty upfront about this. Is he's our liaison to CFPB. He's been there through I think 4 directors now or 5 directors.
Yep.
He's always been great to work with. He will respond to you if you send him a message. He'll give you his cell phone number. He takes calls. He's actually very approachable. But he needs evidence to do stuff. So as an industry, it's one of those things, if you see it, he obviously can't be anecdotal and just, oh, I heard this. But you get something in writing that shows this is going on, by all means, I encourage everyone, share it with them. Because
Yeah.
he's always been really good at the follow through and getting it to the right people, even if he can't do it. But yeah, no, I think it was a fair statement that under the current head of the CFPB right now, that's
It's
not
not
what
going
we're
to
gonna get.
change.
Not gonna
Yeah.
change.
Not going to change.
Not his focus.
Yep, exactly. Well,
We
thank
can
you
hope.
so much. Yeah. You can always try. I mean, you
Yes.
didn't say it wouldn't permanently be looked at, but not with the current
Yeah.
administration. He was pretty clear for sure. Appreciate you doing this with me today.
Oh, you're welcome. I
Always
love
in
this.
love our conversation. We had more time to chat today and get caught up than we did the entire time both of us were at our conference networking with other people. So
Yes.
appreciate you much. For those of you who weren't with us in Louisville, I mean, you heard Marc at the beginning. We're going to have collab labs in Denver. We are in Denver in September,
Yes.
September 8th through 10th. Do not, if you are planning on going at all, do not miss out on registering already, because
Yes.
this is the lowest you're going to see conference registration from us now until April 15th. For our lender members, our conference reg is $595. Come and bring another person with you because you're getting like in almost at 50% off. So that's my used car salesman pitch of the day, but you should plan on joining us. It's going to be a great event. We rolled off of the last one. We already started talking on our ops call this morning about some of the things that we're going to do and do differently for Denver. So please come and join us. Marc, we all appreciate you here. You do so much to help the other people in the network. You gave a shout out to some of the people that were on with you earlier about how great they are. I can guarantee they feel the exact same way about you as we do. So appreciate you doing this with us today. And for everybody else, come back and join us next Tuesday at this same time.
There we go. We'll see you then.
Thanks, Marc.
Thank you.